Welcome back to the program. You can join us on Twitter at Channels TV and at CTV Temple to cast your thoughts on our conversation. A quick look now at the African markets, which we often track as well on this program. Johannesburg Stock Exchange declines this week 0.14%, with the Egyptian Stock Exchange also shedding 0.16% in terms of week-to-date performance. The NSE All-Share Index, which is the Kenyan market, not the Nigerian market this time, shared 0.20% yesterday to 152.92. And then the Ghanaian Stock Exchange is about the only market that had appreciations across board by 0.65% and daily return and 0.77% on a week-to-date basis. Now, our guest on the show has been Ramesele Aziba, investment analyst from AfriInvest, and he's been taking us through the half year, the way they performed in the equities market, the capital market generally. And the second segment of the show, we'll take a look at the fixed income. But before I do the fixed income with you, Ramesele, let's give a look at the sectoral indices. These, for the greater part of this year, it looks like they have appreciated the more as well. Talk to us about this.
Yeah, so as at H1, end of H1 2017, which happened to be yesterday, all the sector indices were up for the period. I mean, this is a sharp contrast to what we had in H1 2016, where we had only the banking index up and all the other indices were down.
Yeah. If we take a look at those equities sectoral analysis in terms of Q today, that's the figure up there. These foreign investors come back to the market, and it looks like they just put the money across all the sectors. Is that what happened?
Yes, across all the sectors, but we know that foreign investors still cherry pick the bellwether stocks across the sector. So look at banking space, the likes of GT Bank, Zenith Bank, basically the tier 1 banks. Moving down to the consumer goods, you have Nestle, Nigerian breweries. In the industrial goods space, you have Dangsem and Waco. And going to oil and gas, you have Total Mobile. So these stocks have been some of the major drivers of sector performance.
No, so let's get more forward-looking and take a look at what will possibly happen in terms of their earnings being released in the second quarter, which we are just as July, of course. We're going to be seeing the earnings for the first half and the second quarter, trickling in. What's your expectation?
We expect their results to be largely positive. I mean, looking at their performance from 2016, where the economy slid into a recession, we saw the resilience of most of these Nigerian companies, especially the banks, how they were still able to churn out positive results. And even looking at Q1 2017 performance, we could already see that most of them are starting to return to positive waves. This goes generally across sectors, and our expectation for Q2 results is also expected to be largely positive, given the improvements in economic conditions that we saw in the second quarter of the year.
So in terms of dividends, do you think we'll be seeing some kind of interim dividends? Because again, the SEC recently, extended the deadline for dividend warrants issuance as well as e-dividend registration.
Well, so for companies that have historically paid interim dividends, looking at the likes of Nestle, Nigerian breweries, GT, there's a chance that they might want to sustain this, given the improved appetite for equities that we've seen.
Okay, so let's quickly take a look at treasury bills and the bonds. The performance of domestic bonds markets in these H1 really look not impressive anyways, because at stats, I think it increased from, the yields now increased from 16.4%, down to 16.7%. Talk to us about what actually happened on bonds as against what we've seen in T-bills.
Yeah, so what we've noticed in this first half of the year, given the aggressive rate of mop-ups by the CBN, we've seen more interest centered on shorter tenured instruments. So you have the likes of the treasury bills and the OMO instrument. So this is where a lot of investors' interest has actually been. And even looking at the yield curve, which shows yields across various tenors of instruments that are currently trading, is currently inverted, which implies that yields on the shorter end of the curve are higher than what we have at the longer end of the curve, which sort of goes against trend, because the longer the investment, the higher the risk should be. So we've seen that a lot of investors have been keying into the shorter tenored instruments.
So sorry for cutting in actually, but why are investors and analysts like you saying that until the CBN cuts the interest rates before we can see the appetite for the securities improving?
Well, not necessarily cut interest rates, but what we've seen is with the spate of OMO auctions that have been issued and the rates at which they've been issued, it's clear that they've been keeping short-term interest rates rather high when compared to long-term interest rates. So as long as rates on shorter tenured instruments remain high, a lot of investors would rather put their investments in this shorter tenured instruments as against investing in long tenured instruments. So until we see that normalization in yield between the short term and long term, the current trend will probably be sustained.
Okay, let's take a look at some other external factors now, or as to how they influenced the debt markets specifically. In the month of June, the United States Federal Reserve increased its rates to about 1.25% or thereabout.
Yeah.
And they are in multilateral organizations like the IMF are saying that, look, this is going to be telling, having its toll basically on frontier markets and emerging markets like Nigeria. Do you agree with that?
Well, so historically, when you have an interest rate increase from one of the developed markets, it usually has a negative impact on emerging markets, as investors would rather put their funds in these developed markets. But what we've seen since the start of the year, despite the rates increases that we've seen from the US Fed, it's safe to say that a lot of investors had already priced in the expectation of higher interest rates coming out of the US. So it hasn't necessarily affected investment flows into emerging markets. We believe the only thing that could possibly trigger a reversal is if the pace of increases in interest rates is probably increased, which isn't expected at the moment. Then maybe we might see a negative impact on emerging markets. But given current state of things, it's safe to say that a lot of investors have already priced this expectation in. So we might not necessarily see any impact.
Okay, and maybe 10 seconds, talk to us about what you make of macroeconomic actions as regards their impact on the market generally, and what you will be expecting in the second half of the year.
We've seen oil production improve. The attacks that we used to have on oil installations last year have greatly reduced, and given that oil is one of the government's major sources of revenue, we believe if production levels can be kept higher and we see oil prices move higher, it will be generally positive for the economy. Also looking at our external reserves, despite we might start to see an appreciation in the external reserves, even though we know that the impact of the CBN's interventions will be seen on external reserves.
I guess one of the key drivers for positive sentiment will also be the ease of doing business, as well as the new tax regime that the federal government just introduced this week. Thank you very much.
Thank you for having me.
Aziba, thanks for making it out this weekend on Capital Market. Let's look out for what will be some of the things we'll be looking out for events at the next week should be the June PMI, Purchasing Managers Index, that will be released on Monday. That's by first FBN Holdings or FBN Quest. We'll also expect the FGN Savings fifth monthly issuance to open Monday to Friday, as well as the Stock Traders Summit, which is billed to hold on Tuesday, 4th of July in Abuja. And that's it this weekend on the program. Thank you for being a part of it. I'm Temple Ashaju, and I'll see you next time. Bye for now.